If you look at their statement, it is very, very brief, very sparse, but it does tell you very clearly what are their motivations. PBOC has stated very clearly their motivation for this 2% depreciation. They mentioned that the Fed is in fact looking to hike rates soon. They mentioned dollar strength. They mentioned US economy improving. And more importantly, they also mentioned that the Chinese real effective exchange rate is basically stronger than expected. And of course, they also made reference to the recent series of macroeconomic data out of China. Now, that's been taken as an implication that they're worried that the July data is weak. So I would say the Chinese are doing what they need to do. And given, in light of what's happening in financial markets and the weaker set of data across July for China, they have to respond with a slight depreciation of the renminbi.
It's interesting because I think that, they were trying to shift from a manufacturing-driven economy to a consumer-driven economy, and this suggests that maybe that's not working as well. They're forced to kind of lower their export prices and court the overseas consumer. Now, what's interesting to me from a U.S. perspective is that U.S. stocks with a lot of exposure to China growth actually haven't really discounted this. So, we've seen major earnings revisions. Earnings are cut for oil and Europe exporters, but China exporters haven't really seen a lot of negativity built into their numbers. Meanwhile, they've been disappointing this quarter. So I think that's the real risk in the U.S. market is China exporters starting to show a little bit of weakness.
I've been out of consensus saying that I think they're going to hold. I think this makes it, much more likely they're going to hold. The one key tell, retail sales this Thursday. We need to see the U.S. consumer come back. We've been talking about the fact for the last 3 months, the bulls have been saying the U.S. consumer is going to come back. The U.S. consumer is come back because labor numbers are good. And we've had disappointing retail sales every time. If we have another disappointing retail sales on Thursday, I find it really hard to believe the Fed is going to want to raise rates.
As far as the Fed is concerned, I don't think it really changes the equation. The Fed will be making monetary policy on the basis of U.S. conditions and because of U.S. policy needs. And I don't think this changes much what we saw last week from the job data. We're seeing a slowly tightening, modestly growing U.S. market, which is just about at the point now where zero interest rates are no longer necessary.